Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look on the gold market on the second video, also take a look briefly on Great British Pound as well. So on the gold market, things that we have talked about yesterday stands the same, so situation, the trading plan stands valid, so market is reestablishing downward action from the retesting of the so-called neckline or something that sort. So market has tested it and now is dropping lower. Our major target stands the same, 1255, 1260. So 1260, this is OP of this A, B, C, top, D pattern, while 1255 is a 1618 extension of this butterfly. Market right now stands below the major confluence, so it has been broken right now. So this is relatively free space for the market, and only some intraday extensions, levels, holds market from the downward action. Major action, of course, will happen on the confirmed payrolls release data. So, as we said today in the Forex analysis, it seems that the markets and investors across the board following the same thoughts that definitely Fed knows what numbers will be, and as they have given slightly more hawkish comments compared to market expectations, it means that they see something in the data and probably it should be positive. Especially it stands in relation to hourly earnings indicator, because that's the major numbers right now in the whole non-farm payrolls report. So market expects 3.3% of the wage growth in this month, increasing from the last month 3.2. So if it will be greater, well, that's all the better. So for United States dollar, and gold market as well waits for numbers. On the intraday charts, on the 4-hour time frame chart, everything stands well with our butterfly. Yesterday, as you can see, market hasn't shown deep pullback, at least currently. This retracement is not over yet, but as we have suggested, market could show some retracement to create the right wing of the butterfly, so it could be a bit greater by the shape. But currently we do not see this. Market shows the same shape as we have discussed yesterday, only minor pullback here stands, and market is dropping lower. Also interesting, the pivot framework here, so you can see market tested, monthly pivot point collapsed, floating around the weekly pivot collapsed as well. Now it even has broken for the weekly pivot support 1, which tells that market is turning to the continuation of the bear trend. This is not just a retracement on this action. And market stands just a few bucks above monthly pivot support 1 as well. So this level very close to the 1260 destination point and extension of the butterfly. So on the 4-hour time frame chart, everything stands as well as the same as well as you can see. On the hourly chart, the reaction that we have suggested really has followed. So take a look at our ABCD pattern, XLP. We said here is some kind of agreement, but not by the Chart Napoli, but just because of a combination of the XLP target with the deep 88 FIB support, although it has been burst significantly and market actually has reached the lows here, but then in return it back up, and now it stands with the retracement up. So here, guys, in a normal condition, I would say that we will get any ABCD pattern, just because of the price action here. So you can see here, you could recognize minor hand shoulders is forming here, and by this pattern, market already has failed to proceed higher with this pattern. It's dropped below these lows, and in normal conditions, I would say that we should get the downward continuation. Besides, it corresponds to the shape of the market on the 4-hour time frame chart. With this butterfly, it's a bit not really good shape of this possible deep retracement here right before hitting of the major target. But today we'll get the non-farm payrolls numbers. Now market could form the grabber. So this candle hasn't closed yet, but it tested the MACD line, And for example, when the numbers will be released on the first volatility, market could show the high spike here, for example, to the 1276 to complete this ABCD, and then shows fast dropping, for example, if numbers will be good. Just based on the volatility, market could show this action, and maybe somehow this ABCD pattern could be formed. Market could hit the 1276 fib level. But as you understand, this is just a suggestion. So by the technical background, we do not see any confirmation of this scenario. So, but anyway, if you already have the shorts, you probably could keep them. Just don't forget to manage your position and move stops to the break-even. If you do not have it, well, in this case, overall setup for jumping right now looks not very attractive, because it will be every time this will be the question where you take the position, where you place your stop. In the current environment, just a few hours from the non-farm purpose release, I do not see here as any valuable bearish setup for position taken. So if we would get regardless triple to sell as we have suggested yesterday, well, that will be another story. But currently we do not have it. Only maybe if you could try to catch the right moment for an entry in a moment of the payrolls release. For example, if we'll see numbers will be good and market volatility will show some here's fast action to this area. Well, in this case, maybe you could try it, but that will be really difficult. So, besides that, what really will happen here with this retracement, it not really very significant moment. Whether the market will show the ABCD or not, everything will depend on the numbers. And as market currently stands bearish, and we see some other signs that point on the strength of the dollar, we suggest that this probably will be a downward continuation here. And this is also just false from our weekly, from the daily setup. So let's keep watching and see what market will give us on the report. On the Great British Pound, the situation stands similar to the euro. So market hits the confidence resistance, doesn't show any upward continuation. And as you can see, the rumors that we have talked about, some compromise between the Theresa May party and the rivals in the parliament, hasn't lasted too long, the impact on the market. And market right now shows the respective resistance. In general, we think that the situation on Great British Pound stands bearish, and chance on a downward action continuation today is also very strong. So, as you can see, gold hasn't provided a lot of setups for trading right now, so it hasn't formed any bearish continuation patterns. So currently it's a bit difficult to take position immediately. Maybe if something will be formed within a few hours before non-farm payroll release and you could try to use it, well, maybe this will be chance. But currently it's too risky to jump in right now.